How do I buy real estate with my retirement accounts? And is that even a good idea? Will I have to pay tax on that? And if real estate is a tax-deferred investment, do I even want to buy real estate with my retirement account? We're going to look at all of those things today. I'm Mitzi Sullivan CPA with Facts, Figures, and Fallacies from the front line. We're getting a lot of questions this time of year about how to buy real estate with your IRA or your 401k, and should I buy real estate in my retirement account? So we're going to address all of those questions today. And let's just begin with a definition of what a self-directed retirement account is. Then we'll talk about how to actually buy real estate with your self-directed retirement account. So a self-directed retirement account is just like your regular retirement account, only you're directing those investments. So maybe you're investing in stocks or bonds or mutual funds, but you could also invest in something like real estate. You could invest in promissory notes. You could actually invest in a small business, a privately held corporation. There are so many things that you can invest in, and this is just very popular for investors that want to increase their returns. Maybe they're not happy with what they get just investing in stocks, and so they're looking for a little bit better return.
Okay, so let's go through the steps that you recommend for somebody who wants to create one of these self-directed retirement accounts. And one thing I wanted to reiterate is these can be a 401k, an IRA, an SEP, a simple. It's not necessarily limited to one specific type of retirement account, but in our examples, we're probably going to say IRA, Roth IRA, traditional, but it can be many different types of retirement accounts.
So in this example, let's say we want to open up a brand new Roth IRA, self-directed Roth IRA. So the first thing we want to do is make sure we set up a brand new account. We'll go to a trustee that offers these self-directed accounts, and we'll open up a brand new self-directed account, and then we need to fund that account. So there are different ways to fund the account. You can do your annual IRA contribution, which would be $7,000 for 2024, $6,500 for 2023. You could also transfer an existing IRA account, funds from one IRA account into another one, or maybe you want to transfer an existing 401k account balance into your new self-directed IRA. So that would help you get that balance in the IRA larger, faster.
Awesome.
And so one thing to remember about that is I would recommend don't set up that self-directed IRA account until you have enough money, or maybe you've already identified an asset that you want to purchase, an alternative asset that you want to purchase, because the fees are higher in those self-directed accounts. So maybe just wait until you know what you want to purchase with that account, or you want to make sure that you have a large enough fund balance to purchase that self-directed asset.
And then the step 2 that you would recommend would be to set up an LLC. And can you dive into why that's so important?
Well, if you were, let's say you're purchasing a piece of real estate and you're going to need to, let's say it's a rental property, and you're going to be collecting rents, and you're going to be paying your maintenance person, maybe you're going to be paying your housekeeper, and you have multiple expenses. You don't want to be requesting a check from your trustee each time you need to pay an expense. So in that case, it would make sense to set up an IRA LLC, and that way you have control over the checkbook. And that just makes it easier to be able to collect the rents, pay the expenses that are related to that IRA.
So when you create the LLC, one of the first things that you'll do is create an LLC bank account, correct?
Correct.
And that'll be underneath your self-directed Roth IRA in this example.
Right. So the IRA will actually own member units of the LLC. So typically if you have an LLC and maybe it's a partnership and maybe Nick owns 50% and Jessica owns 50%, each member will have their own membership units. The only difference is if you're purchasing or setting up a brand new LLC inside of your IRA will be the owner of those member units. Instead of Nick or Jessica, it would be Jessica's IRA or Nick's IRA. So now you've set up your LLC, you've transferred the cash into your LLC bank account. You just need to actually purchase the property. So in our example, let's say we purchase a piece of residential real estate and you would just, the title when you go to purchase that asset will be in the name of your LLC, which is owned by your IRA. So you purchase the asset, you collect your rents, you pay your bills. So keep in mind that you cannot personally use that investment property. So this needs to be treated as a business separate from yourself. You can't get personal use of it. It can't be for your spouse or maybe your daughter. Anyone of lineal descent will be a disqualified person. So none of those people can use the property, and you can't use it yourself.
So this kind of leads into the next step, being that you would need some type of property management company or entity, right? Because you need to be passive because this is an investment activity.
Right. So this is an investment activity. You want this to be a passive investment. You can pay the bills for this rental property, but you can't be the cleaner. You can't be the maintenance person. You can't do sweat equity. None of that would be allowed, and that would be disqualified if you participated in any of that. So make sure you keep it separate. You also can't be your own realtor. So you can't even be involved in the, if you're a realtor, you can't be the realtor involved in the transaction to purchase this property.
Another thing too is annual maintenance of your LLC. This goes across the board for anyone who has an LLC, but it is very important to keep your LLC, books and company book up to date each year, correct? And have your meeting minutes and everything, and that's a service that we offer.
Right. So Jessica does this for many of our clients. It's just keeping these LLCs active, because the last thing you want to do is go through all the trouble to set up your LLC for that protection.
The biggest thing would be setting up the LLC correctly from the get-go. So like Mitzi said previously, this is not a traditional LLC setup. You need to go to someone who specializes in this field. And after you have it set up, it may depend on if you're buying land in different states, if it's happening regularly, or what exactly you're investing in. You want someone to be reviewing your LLC and making sure that you're complying with all the laws and regulations. If ownership changes, that you have amendments and meeting minutes and all of that. So make sure that you're getting with someone to make sure the integrity of your LLC is complete. Otherwise, there was no point in setting up an LLC in the first place.
Awesome. So that wraps up our step-by-step process in setting up your own self-directed account. This is just such a great way to diversify your retirement. And for a lot of people that are wanting to get into that real estate investment world, being able to do that with a retirement account is so cool. So in the description below, we've actually linked some resources. It'll have a summary of these steps. It'll also have some IRA companies, some trustees that can help you set up this account. And this is something that you'd want to work with a trustee and your CPA to make sure everything's being done properly. One last thing I'd like to mention is if you liked this video, please give us a thumbs up, subscribe to our channel. We post videos weekly, so we're very happy that you tuned in, and we look forward to seeing you next time on Facts, Figures, and Fallacies from the front line.